The stock market goes through cycles. Two important phases of stock market cycles are the bull and the bear market. Sometimes you may find it difficult to decide when to begin a systematic investment plan. Is there really a right time to start your SIP? Even you may have a question in mind whether to continue making investment during a certain market phase. Let's find answers for these questions through a detailed analysis of the data from the last 27 years. Welcome to holisticinvestment.in. First, let us look at the predictability of market cycle. Let us accept the fact that it is impossible to consistently predict the exact top or bottom of a market cycle. At best, one can create and follow a valuation checklist whenever one deviates from their strategic asset allocation, which should help investor reduce portfolio level volatility to some extent while participating in the equity market. But still, let us assume one has some magical power and can predict the exact top and bottom and wants to start a long-term SIP. So, should that investor start SIP at the top of the cycle or at the bottom of the cycle? To answer this question, let us look at the data. S&P BSE Sensex TRI data for the last 27 years. The data includes those periods when the equity market has fallen more than 20% from its top. The table here shows the investment summary of two investors. One who started at 10,000 rupees SIP at the market top of the market cycle and the other at the bottom. In the year 1996, we could see a 21% market fall. One person starts investing in the month of September and the other person starts in the month of December. The first person invested 32.5 lakhs and the later invested 32.2 lakhs. The difference in investment amount is 30,000. The final maturity value is 334.7 lakhs in the first case and 322.4 lakhs in the later. The difference in final maturity value is 12.2 lakhs. Refer the final column, which is the returns column. There is no difference in terms of percentage return. Next, look at the period between February 2000 and September 2001. The correction time is wide, that is 19 months. So the difference in final maturity value is also lofty, 42.1 lakhs. Returns in percentage wise is almost the same, just 0.1% difference. Next, look at the year 2020. There was a dip 38% in March 2020. The person who starts investing in Jan 2020 would have invested 4.5 lakhs and his current value is 6 lakhs. If another person starts in the month of March, he would have invested 4.3 lakhs and his current value would be 5.7 lakhs. The returns is 15.6% for the former and 16.3% for the later. While analyzing the data, we could figure out three important factors. It is interesting to note that while the percentage return is marginally higher for SIPs started at the bottom of the market cycle, the absolute gain in rupee term, that is wealth creation, is far higher for SIPs that began at the top. The cost of delay of starting SIP late can be huge over the long term. The longer the market takes to reach the bottom, the higher the cost of delay, keeping all other things constant. Even the marginal difference of percentage return goes away over the long term, irrespective of whether you started at the top or bottom. Next, what should be your action items? It could be tempting to stop a systematic investment plan when the markets are down. However, you don't have to time the market with SIPs. All you need to know that even if there are temporary ups and downs, your SIP will be successful in the long run. Your investment goal shouldn't be dashed by transient downturns. If your assets are distributed over a longer period of time and among a variety of investment types, there is less chance that one bad year would derail your entire plan. Here is our conclusion. Please keep in mind that market is unpredictable. There is no such thing called a perfect time to start your SIPs. This is because it is unclear if the present high will herald the beginning of a declining trend or the creation of new highs. For this, we should understand that what type of investment we are making. Bear in mind the SIPs are designed for a long-term investment approach. If you are serious about investment, better consult a financial planner. A professional financial planner can come up with a comprehensive financial plan that best suits your individual goals. A detailed blog post on this topic is available in our website and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.